Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right. How's it going, Luke?
You know, not too bad. We actually, it's maybe we can't call it warm out today, Mike, but it's a pretty nice April day, isn't it?
We have some pretty volatile weather ahead of us here the next week. A lot of folks are going to try to get planning probably by the end of next week, but we're going to be 80 degrees one day and 30 for a low the next. So it's going to be some volatile wet weather here.
A little up and down, kind of like the markets, right?
A little bit. I think no better place to start than we're talking about the hog market, but let's get some of these outside markets out of the way. I feel like this is kind of what folks are looking forward to today in the podcast and kind of what's relevant, I think, in this marketplace. We've traded some pretty unique things in the past couple trading sessions, but I think last night would be the place to start. Trump was supposedly going to send Iran back to the Stone Age with a barrage of missiles last night, and kind of a last-minute agreement between the U.S. and Iran led the Trump administration to suspending those attacks on Iran's infrastructure. Yeah, they were mainly targeting bridges, power plants, things like that. But it's a 2-week agreement that they've got for this ceasefire. And he said they received a 10-point proposal from Iran, and they thought it was a workable basis which they could negotiate upon. And Iran now, if you look for very fresh news, kind of as we speak here, after the overnight, we saw, at times over a $20 sell-off in May crude and the S&P being up 160. We're backing off a little bit now as you see news that Iran's parliament speaker said that the ceasefire deal with the U.S. was violated. So it's still a very fresh situation. It's last night's news, but it's a 2-week deal to fumble this somehow one way or another. I have a feel like we're going to have some increased volatility here for the next couple trading sessions, to say the least, Luke.
Yeah, without a doubt. I'm personally thankful last night didn't happen. That seemed very a lot of death and destruction, right? But it seemed like forward progress in the markets, like you say, with crude's reaction, it was well received. But there's no simple solutions in this, right, Mike?
The outside markets, the way I've been summing up this situation, I think it's very simple when you look at things like the crude oil market and the S&P. Those two are the main markets that seem to matter, get traded correctly through this time frame on risk on, risk off, inflation on, inflation hedging off. I think those are trading and adjusting accordingly. The outside market, specifically the ag, since we care about the ag markets on this show, we've been a little disconnected lately on the egg market, specifically the grains, because those have been the ones moving a lot. We saw an initial pullback in corn and soybeans last night. It had a big pullback. Soybeans closed green today, Luke, and I thought that was some very odd trade. So some interesting egg trade, as I feel like, maybe the cattle didn't care so much about it as well. Should have had a pretty big up day with S&P being higher.
Right.
So I feel like the egg markets were somewhat insulated by this news by the end of the day. Quick initial knee-jerk reaction, sure, but they felt a little weak lately anyways. So it'll be interesting to see what impact crude oil has specifically on corn and soybeans going forward. But it sure seems like some of the ag markets have been insulated from this. And hogs, probably out of all of the ag contracts, those seem the most insulated, don't you think?
Yeah, I would agree with that. With that.
So some very interesting outside markets, interesting outside market activity. Funds are going to be very interesting in volume to keep an eye on. But this will be an ever-changing situation the next 2 weeks. And then also on the soybean side, just keep an eye open for May 14th, May 15th. We've got some trade talks between the U.S. and China coming up. So otherwise, it's almost hard to forget that there's a WASDE report tomorrow.
I know it seems to be taking for sure a backseat amongst all the other the factors pushing and pulling this market around.
Well, what do you think about the hog market today? I feel like we had some added resistance on this market. I know that the 11 a.m. print on cutout was a little bit weak as well, but what do you want to focus on there?
Yeah, I mean, it's you kind of got, I'd say the hog market, you can look at it very, very short term, right? And there's some things that aren't real exciting, right? Then you can take a little longer longer term view on it, right? And I guess my whole point is we are like, it's like the hog market is reading a textbook compared to history and seasonals, right? If you just look at May and April, you can look at cutout. I mean, you can look at index, you can look at cash price. It's typically a very flat time. And we're not in burdensome production runs. We have higher kills this time of year, right? And then as we move into early to mid-May, we get into seasonally adjusted lower slaughter. We get grilling demand, and we typically get a movement up, right? And so things all in all, I mean, we still cash. It's not hot this week, but it's fine. It's $90, $91, $92, right around, actually a little bit above index, right? That's a win. Cutout, it's just kind of up and down. And it went up to 99, then drifted back down to 97 and change. And so my observation with all this is the hog market's acting very normal for the time when we're just in a little bit of a stale spot. And that's quite okay.
That's refreshing in the egg space right now, Luke.
Yeah. But what's interesting when you tease out of this is this market's optimistic, right?
Yeah.
And so if you can pull up like the June chart, I just think it patterns the story. Like April's locked. It's done next Wednesday. April has no movement, right? So we're talking about June. And we've had really kind of some ranges here and really strong support around 104, as you can see in this.
I'm looking at that real hard at that 20-day.
Real hard. But, around 108, I mean, some pretty good resistance, right? So how I'd like to describe that is the market has optimism. It wants to buy this up. We had the hog and pig report a few weeks ago, 10 days, which was friendly, right? And we had that big up day. Mm-hmm. We had a $99 cutout print, so we were up $3 the other day. I mean, the market wants to buy this, but they need to see to move this June higher in July and August. Like we need to break out of the range. In my point is we need cutout to not fail at this, mid to upper 90s. It needs to proceed to 100, 105 and on up and so forth. And it's just not quite ready yet. It's building. Mm-hmm. It's doing fine. So when you see them buy it up, I mean, we went right up to kind of some of that, resistance areas. And then the next day cutout was down $1. We went down. So we're in that time frame here. I would say though, if you look at the 200-day moving average, because we've hit the 100-day now basically 3 times.
Yep.
So we're really testing that. If we break below that, it sure could look like a run to 102, would technically not be out of bounds, right? But again, from everything we hear on the product side, it looks like it just needs a little bit of time. It's working. Hams are gaining back. Bellies are doing okay, a little back and forth, right? So all in all good. Then the other thing to tell, like the hog market is in a good spot, is you go out to December and you look out not only at December or even into the Feb and April 27.
Because I mean, December is near contract highs, but like the old crop or the closer months certainly are not. What can you tell me about those spreads?
Exactly, and that's what I think is interesting. Is that the supply very manageable. We've been saying that. Industry participants know that, feel it. The hog and pig report suggested that, with actually a slightly smaller breeding herd and everything except for the heavyweight category at 100% of a year
very
ago.
Stable.
Very stable, right? So and demand still. I mean, beef's broke off. It's above 400 mark. It's still very expensive. Supplies are like protein demand is good, and I mean, cut out at it's 97 instead of 101. It's still so it's good. The market wants to put this premium in, and that's where you're seeing at the front end. It's just kind of stuck because cutout stuck. And it needs to justify those premiums, but further out in the curve, I mean, where you've got these, December, February, April, I mean, not quite at, but pushing up right near contract highs. It's just we're in a good spot in this market, right? And so I like seeing those deferred contracts continue to trade a little stronger. And, not to lose track of the whole perspective too. Margins, we have had some pullback in corn, in costs, and the deferred contracts are performing quite well. Forward margins are, December, and quite frankly, you want to look at a targeted margin. Now we're in a great spot of the cycle, so we do have a propensity to look for a little more than targeted margins now, but we're kind of depending on your cost, kind of at target margins all the way out to June of 27. So we do have clients that are hedging out to June of 27. It makes really good sense. So all in all, just summing it up, if you will, just volatility around geopolitical acres. I mean, weather, we don't have any weather risk out in this thing. Like, watch the inputs, protect the inputs, right? The hog market, it's kind of in that late March, early April flat. Things look good. That's holding the nearbys back again a little bit from breaking up to new contract highs. I think just give that a little time. And then the deferred contracts, I mean, Mike, as we inch up and we go to 85, and if we can break that and could trade up towards, I mean, you're getting in kind of some rarefied air there, right? Just the deferred is, the hog curve is still showing us some really good things, a lot of things to be really excited about. So don't forget about managing risk out here in the midst of this, because there's some really amazing margins out there, Mike.
And we are starting to get into a more volatile time of the year, regardless, whether it be inputs or for the lean hog market, going into spring, summer time frame here, especially with a few of the other things we have going on. Money flow, commodities could be a pretty big deal here with volatility, as volatility leads to, guess what? More volatility.
Yeah, absolutely.
So, all right. Well, thank you for coming on the show today. I appreciate it. We'll catch you next time. And in the meantime, thanks for tuning in today, everybody. Just a reminder to click the link in the description to sign up for our daily market commentary, get fast insights into the ag markets, and so much more. Also, check out our website at professionalagmarketing.com.